Are you ready to kind of peek behind the curtain and learn about billionaire investing habits?
You always hear these stories about billionaires and their crazy investments, but we rarely get to see the method behind the madness, right?
Right. It's like, what are they actually doing that's different from the rest of us? And I think that's what makes this so fascinating. We're not just talking about the usual stock tips or real estate advice.
This is about understanding their mindset, their strategies, and how they see the world differently when it comes to building wealth.
Okay, so let's get into it. What's the first billionaire habit we need to decode?
Let's start with asset accumulation at scale. Most people think billionaires just invest a lot of money, but it's not just about the amount, it's about the way they diversify their holdings.
So it's not just about having a bunch of different stocks, it's about having a diverse range of assets.
Exactly. They're not limiting themselves to the stock market. We're talking real estate, private companies, rare collectibles, intellectual property.
Wow, so they're creating a web of assets that spans across industries and even continents.
That's right. They're thinking globally, identifying booming sectors and planting their flags in those high-growth areas.
Okay, so let's get practical here. How can someone just starting out even begin to apply that kind of thinking?
You don't need to be a billionaire to start thinking like one. Begin by exploring international investments. Look into real estate investment trusts or REITs that focus on overseas markets.
Ah, so I can tap into global real estate without needing a massive amount of capital.
Exactly. Or consider ETFs that track emerging industries in different parts of the world.
So I can diversify my portfolio geographically and across different industries at the same time.
You got it.
Yeah.
And don't forget about platforms that allow for fractional ownership of real estate and other assets.
I like that, taking these big concepts and finding accessible ways to apply them.
That's the key. It's about taking the principles and scaling them to your own situation. Now let's move on to something that might seem counterintuitive. Investing in illiquid assets.
Illiquid assets. Now that sounds a bit risky. Isn't the whole point of investing to be able to access your money when you need it?
That's what most people think, but billionaires see it differently. They understand that tying up some of their wealth in assets that aren't easily traded can be a strategic advantage.
So they're okay with not being able to sell those assets quickly.
Because they're playing the long game. They see the immense value these assets can hold over time, even if they can't be converted to cash instantly.
Can you give us some examples of these types of illiquid assets?
Think about things like private companies, rare art, valuable patents, even things like vineyards or water rights.
Wow, that's definitely a different way of looking at investment. So how can someone who's not in the market for a Picasso tap into this concept?
There are ways you can look into platforms that let you invest in fractions of artwork or explore the world of collectibles.
So I can own a tiny piece of history or even invest in things like rare sneakers or comic books.
Exactly. And while you might not be buying a whole vineyard, there are ways to invest in agricultural land or other tangible assets.
That's actually really interesting. It's like owning a piece of something real and tangible.
And that brings us to another key habit, leveraging advanced data and AI.
Now, this is where things get really interesting. I know billionaires are using data and algorithms to make smarter decisions.
Imagine having a team of expert analysts working for you 24/7, crunching numbers and spotting opportunities that most people miss. That's the kind of advantage data and AI can provide.
It sounds incredibly powerful.
Yeah.
But do you really need a supercomputer to do this?
Not necessarily. While we might not all have personal AI assistants yet, there are a growing number of tools and platforms that can help you analyze data and make more informed investment choices.
Can you give us some examples of what's out there?
Services like Seeking Alpha use AI to analyze financial data and provide insights on stocks, ETFs, and other investments. There are also sophisticated platforms that can help you analyze real estate trends or even track alternative investments.
So even without a billion-dollar tech team, we can still leverage data to our advantage.
Absolutely. And that brings us to a strategy that's closely tied to using data staking in high-growth private markets.
Ah, yes, the world of startups and private companies. It's where the real game changers often happen.
Billionaires are always looking for those early-stage companies that have the potential to disrupt industries. They see the potential for massive returns.
I get it. But how can someone who's not a venture capitalist access these kinds of deals?
It's becoming more accessible than you might think. Platforms like AngelList connect investors with promising startups, and there are equity crowdfunding options that allow you to invest smaller amounts.
So I can become a mini venture capitalist in a way.
Exactly. Now, of course, there's always risk involved, especially with private companies.
Right, but the potential rewards can be huge if you choose wisely.
Exactly. And it's another way to diversify your portfolio beyond the stock market. Now let's move on to a habit that might surprise you. Investing in intellectual property.
Intellectual property, you mean like patents and copyrights?
Billionaires see intellectual property as a key asset class. They understand that owning or investing in IP can create a steady stream of income and appreciate significantly over time.
So it's not just about investing in companies, it's about investing in the underlying ideas that drive those companies.
Exactly. Think about patents for groundbreaking technologies, trademarks for iconic brands, copyrights for popular music or literature. These are all forms of intellectual property that can be incredibly valuable.
So how can someone who's not an inventor or a musician get involved in this?
You can invest in companies known for their strong intellectual property portfolios, or if you have expertise in a particular area, you can create your own IP.
Create my own IP.
Think about writing an ebook, developing an online course, or even creating software that generates royalties. You're essentially turning your knowledge and skills into an asset.
I love that. A whole new way of thinking about wealth creation. Okay, what's next on our billionaire habit checklist?
Let's talk about something that might raise a few eyebrows. Strategic use of positive debt.
Wait a minute, debt. Aren't we trying to learn how to build wealth, not accumulate debt?
That's the common misconception. Billionaires see debt differently. They use it strategically to acquire income-generating assets.
So they're using borrowed money to buy assets that will essentially pay for themselves.
Exactly. For example, they might take out a low-interest loan to buy a commercial property. The rental income from that property covers the loan payments, and they're building equity in an asset that's likely to appreciate in value.
So it's not about avoiding debt altogether, it's about using it wisely and strategically.
Exactly. But it's important to be disciplined and calculated. You need to make sure the asset's return on investment significantly exceeds the interest rate on the loan.
Right, so it's not about using debt recklessly. It's about using it as a tool to accelerate your wealth-building efforts.
Exactly. Now let's move on to a habit that requires a bit of vision and courage. Investing in future trends and technologies.
Okay, this is where we need that crystal ball, trying to predict the industries and technologies that will shape the future.
It's not about predicting the future with certainty, but recognizing where the world is heading and investing in the technologies and innovations that will drive the future economy.
So we're talking about being forward-thinking and positioning yourself to benefit from those changes.
Exactly. Billionaires are looking 5, 10 years ahead and investing in areas like autonomous vehicles, renewable energy, blockchain technology, next-generation pharmaceuticals, even space exploration.
Those are some pretty big trends. How can someone who doesn't have a direct line to Silicon Valley get in on these future-forward investments?
You don't need to be a venture capitalist to participate. There are ETFs that focus on specific emerging industries, allowing you to spread your investment across a basket of companies in that sector.
So it's a way to diversify your risk while still tapping into the potential of these future-focused industries.
Exactly. And there are individual stocks of companies that are leading the charge in these areas. Do your research, understand the technology, and invest in the companies you believe will shape the future?
This is incredible. We're getting a glimpse into strategies that most people don't even know exist.
And we're not done yet. We have even more billionaire habits to uncover in the next part of our deep dive.
I can't wait to hear more. This is truly eye-opening. Stay tuned for part 2, where we'll delve deeper into the world of billionaire investing.
Welcome back to our exploration of billionaire investing habits. In part 1, we covered a lot of ground, from diversifying across asset classes to embracing positive debt. Are you ready to unlock even more secrets of the ultra-wealthy?
Absolutely.
Yeah.
I'm eager to learn more about how these billionaires think and invest. So what's on the agenda for part 2?
Let's revisit habit number 1, asset accumulation at scale. We talked about how billionaires diversify across a wide range of assets, but it's not just about spreading your investments around, it's about understanding the strategic role that each asset class plays in their overall portfolio.
So it's not just about having a little bit of everything, it's about having a plan for why you're invested in each specific asset.
Exactly. Let's break it down. Starting with real estate. This is a cornerstone of many billionaire portfolios. Real estate is a tangible asset, something you can see and touch, which provides a sense of stability and security.
And it's not just about owning a luxury penthouse, right? We're talking about income-generating properties.
Absolutely. Think about commercial real estate, apartment buildings, industrial warehouses. These types of properties generate rental income, providing a steady stream of cash flow. Plus, real estate tends to appreciate in value over time, especially in desirable locations.
So it's a double win. Potential appreciation and passive income. No wonder billionaires love it.
Exactly. Then you have equities, which represent ownership in companies. Billionaires are incredibly selective about the stocks they choose. They're looking for companies with strong fundamentals, a history of growth, and a competitive edge in their industries.
So it's not about chasing the latest hot stock tip or following the crowd. It's about investing in companies that have a solid track record and a sustainable business model.
Precisely. And don't forget about alternative investments, things like private equity, venture capital, hedge funds. These can offer the potential for higher returns, but they also come with greater risk and typically require a longer investment horizon.
It sounds like there's a whole world of investment opportunities beyond the traditional stock market.
There is. And that's exactly what billionaires understand. They're constantly exploring different asset classes, looking for opportunities to maximize their returns and diversify their portfolios. And remember, diversification is an ongoing process. As your financial situation evolves, you'll need to reassess your asset allocation and make adjustments to ensure your portfolio remains aligned with your goals.
It definitely sounds like a lot to keep track of, but I'm starting to see how this approach can create a more resilient and robust portfolio.
That's exactly the point. Now let's dive deeper into habit number 2, investing in illiquid assets. We touched on this briefly in part 1, but I want to explore the specifics of how billionaires approach this strategy.
This is the one where they invest in things that can't be easily converted to cash, right? Like rare art, private companies, things like that. Why would they choose illiquid assets when they could have immediate access to their money?
Because they understand that illiquidity can actually be an advantage. It allows them to tap into exclusive opportunities that are often overlooked by the average investor. Plus, these assets tend to hold their value well over time, providing a hedge against market volatility.
So it's about playing the long game, being patient, and allowing those investments to mature without being swayed by short-term market fluctuations.
Exactly. And the world of illiquid assets is vast and varied. It includes everything from private companies and startups to rare art collectibles and even intellectual property.
Okay, so let's break down some of these illiquid asset classes and explore how someone who's not a billionaire can potentially access them.
Let's start with private companies. Investing in startups used to be the exclusive domain of venture capitalists and angel investors. But now there are platforms like AngelList and equity crowdfunding sites that allow individuals to invest smaller amounts in promising early-stage companies.
So it's like being a mini venture capitalist getting in on the ground floor of potentially game-changing businesses.
Exactly. Of course, it's crucial to do your due diligence, understand the risks involved, and invest only what you can afford to lose.
That's crucial advice for any investment, but especially when dealing with startups and early-stage companies.
Absolutely. Now let's move on to the world of art and collectibles. Investing in fine art used to require deep pockets and connections in the art world. But platforms like Masterworks have democratized this asset class by allowing individuals to buy shares in iconic paintings.
So it's like owning a tiny piece of a masterpiece, which is pretty cool.
Exactly. And there are similar platforms emerging for other collectibles like rare sneakers, vintage comic books, and even NFTs. These can be a fun and potentially lucrative way to diversify your portfolio and invest in things you're passionate about.
I love that. It's about aligning your investments with your interests. Okay, let's talk about intellectual property. We touched on this in part 1, but I'm eager to explore how someone can invest in IP without being an inventor or creator.
One option is to invest in companies that are known for their strong intellectual property portfolios. These can be tech companies with valuable patents, pharmaceutical companies with groundbreaking drug discoveries, or even media companies with a vast library of copyrighted content.
So you're essentially betting on the future value of their ideas and creations.
Precisely. Another option is to invest in royalty streams. This involves purchasing the rights to future earnings from things like songs, books, or even patents.
That's fascinating. It's like owning a piece of the creative output of artists and inventors.
Exactly. And it can provide a steady stream of passive income over time. Now, it's important to note that investing in illiquid assets requires a different mindset than investing in publicly traded stocks.
You're right. It's about taking a long-term view, being comfortable with less liquidity, and potentially tying up your capital for an extended period.
Precisely. But for those who are willing to embrace these characteristics, illiquid assets can offer significant rewards and play a valuable role in a well-diversified portfolio.
This has been an incredibly insightful deep dive into the world of illiquid assets. We've uncovered some truly unique and potentially lucrative investment opportunities that go beyond the traditional stock market.
And remember, these are just a few examples. The world of illiquid assets is vast and constantly evolving, so it's essential to do your research, understand the risks, and seek professional advice if needed.
Great advice. Always remember to invest responsibly and within your means. Now let's shift gears and explore habit number 3. leveraging advanced data and AI for investment decisions. This is an area where billionaires have a significant edge.
Absolutely. Billionaires have access to vast amounts of data and sophisticated algorithms that help them identify trends, analyze markets, and make highly informed investment decisions.
It's like having a team of expert analysts working around the clock, crunching numbers and uncovering hidden opportunities.
Precisely. But here's the good news. You don't need a billion-dollar hedge fund to start leveraging the power of data and AI in your own investing.
Okay, I'm all ears. How can the average investor tap into these advanced tools?
Well, there are a growing number of platforms and services that offer AI-powered market insights and analysis. Some of these are subscription-based, while others offer free tools that can help you get started.
Can you give us some specific examples of what's out there?
One example is Seeking Alpha, which we mentioned earlier. It uses AI to analyze financial data and provide insights on stocks, ETFs, and other investments.
So like having a virtual financial advisor in your pocket.
Exactly. Another example is TradingView, which offers a wide range of charting tools and technical indicators that can help you identify potential trading opportunities.
So it's about using technology to visualize market trends and make more informed decisions.
Precisely. And there are even AI-powered robo-advisors that can manage your investments for you based on your individual goals and risk tolerance.
That's amazing. It's like having a personalized investment manager at your fingertips.
Yeah.
But even with all these powerful tools, it's still important to do your own research and understand the fundamentals of investing.
Absolutely. Technology can be a powerful tool, but it's essential to use it wisely and not rely on it blindly. Always remember that investing involves risk, and past performance is not necessarily indicative of future results.
Great advice. It's about using technology to enhance your decision-making, not replace it. Now let's move on to habit number 4. Staking in high-growth private markets. This is an area where billionaires have traditionally had a significant advantage.
Absolutely. Investing in private companies and startups used to be the exclusive domain of venture capitalists and angel investors. But now there are more opportunities than ever for individual investors to participate in this exciting asset class.
Okay, I'm intrigued. How can someone who's not a seasoned investor get involved in private market investing?
One option is to explore online platforms like AngelList Seed Invest and Republic, which connect investors with promising startups seeking funding. These platforms have opened up the world of venture capital to a wider audience, allowing individuals to invest smaller amounts in companies they believe in.
So it's like being a mini venture capitalist getting in on the ground floor of potentially disruptive companies.
Exactly. Of course, as with any investment, it's essential to do your due diligence, understand the risks involved, and invest only what you can afford to lose. Private market investing is inherently risky, but it can also offer significant rewards for those who are willing to take on that risk.
So it's about finding the right balance of risk and reward for your individual circumstances and investment goals.
Precisely. And remember, diversification is key. Don't put all your eggs in one basket, even if it's a very promising basket. Spread your investments across multiple companies and industries to mitigate your risk.
Great advice. So while private market investing can be risky, it's also an exciting opportunity to potentially get in on the ground floor of the next big thing. Now let's move on to habit number 5. Investing in intellectual property. This is an area that many people may not even consider as an investment opportunity.
That's right. But billionaires understand that intellectual property IP can be a valuable asset that can generate significant income and appreciate over time.
Okay, let's break this down. What exactly is intellectual property and how can someone invest in it?
Intellectual property refers to creations of the mind, such as inventions, literary and artistic works, designs and symbols, names and images used in commerce. It can be protected in law through patents, copyrights, trademarks, and trade secrets.
So it's about owning the rights to ideas and creations that have commercial value.
Exactly. And there are several ways to invest in intellectual property. One option is to invest in companies that are known for their strong IP portfolios. These could be tech companies with valuable patents, pharmaceutical companies with groundbreaking drug discoveries, or even media companies with a vast library of copyrighted content.
So you're essentially betting on the future value of their ideas and creations.
Precisely. Another option is to invest in royalty streams. This involves purchasing the rights to future earnings from things like songs, books, or even patents.
That's fascinating. It's like owning a piece of the creative output of artists and inventors.
Exactly. And it can be a great way to diversify your portfolio and generate income from non-traditional assets. Now, it's important to note that investing in intellectual property can be complex and requires specialized knowledge.
So it's probably not for the novice investor.
That's right. It's essential to do your research, understand the risks involved, and seek professional advice if needed. But for those who are willing to take the time to learn about this asset class, it can offer unique and potentially lucrative investment opportunities.
This has been an incredible deep dive into the world of intellectual property investing. We've uncovered some truly fascinating and potentially rewarding ways to invest in the creative output of the human mind.
And remember, the world of investing is constantly evolving. It's essential to stay curious, explore new opportunities, and adapt your strategies as needed.
Great advice. Now let's move on to habit number 6, strategic use of positive debt. This one might sound counterintuitive, but billionaires have a unique perspective on debt.
Absolutely. While most people view debt as something to be avoided at all costs, billionaires understand that debt can be a powerful tool for wealth creation when used strategically.
Okay, I'm listening. How do they turn debt into an asset?
The key is to focus on positive debt, which is debt that is used to acquire assets that generate income or appreciate in value. For example, a billionaire might take out a loan to purchase a commercial property that generates rental income.
So they're using borrowed money to buy an asset that will essentially pay for itself and then some.
Exactly. And as the property appreciates in value, they're building equity and increasing their net worth. But it's crucial to emphasize that billionaires are very strategic about their use of debt.
They're not racking up credit card bills or taking on risky loans they can't afford.
Precisely. They carefully analyze the potential return on investment before taking on any debt, ensuring that the asset's income or appreciation potential will exceed the cost of the loan.
So it's about being disciplined and calculated, not using debt recklessly.
Absolutely. And it's important to note that this strategy is not without risks. If the asset doesn't perform as expected or interest rates rise, the debt can become a burden.
So it's essential to have a solid financial plan, understand the risks involved, and seek professional advice if needed.
Exactly. Now let's shift gears and explore habit number 7, investing in future trends and technologies. This is an area where billionaires have a knack for spotting what's next.
It's like they have a crystal ball predicting the industries and technologies that will shape the future.
Well, it's not magic. It's about being keenly aware of emerging trends, conducting thorough research, and having the courage to invest in ideas that may seem unconventional or even risky at the time.
So it's about having a forward-thinking mindset and being willing to embrace innovation.
Precisely. Billionaires understand that the world is constantly changing, and they're always looking for the next big thing. They're not afraid to invest in companies that are developing groundbreaking technologies or disrupting established industries.
Give us some examples. What are some of the areas where billionaires are focusing their attention right now?
Well, some of the hot areas include artificial intelligence, biotechnology, renewable energy, space exploration, and even the metaverse. These are all areas where there's significant potential for growth and innovation in the years to come.
So it's about investing in the future, betting on the companies and ideas that are likely to shape the world of tomorrow.
Exactly. And while it's impossible to predict the future with certainty by investing in these emerging trends, you're increasing your chances of being on the right side of innovation.
But how can someone who doesn't have a billion-dollar venture capital fund access these opportunities?
Well, there are several ways. One option is to invest in ETFs that focus on specific industries or themes, such as artificial intelligence or renewable energy. This allows you to diversify your investments across a basket of companies in that sector.
That's a great way to get exposure to these emerging trends without having to pick individual winners.
Exactly. Another option is to invest in individual stocks of companies that are leading the charge in these areas. But this requires more research and due diligence as you're taking on more company-specific risk.
So it's important to understand the business, the technology, and the competitive landscape before investing in individual stocks.
Absolutely. And remember, even though these areas have significant growth potential, they can also be volatile. It's essential to have a long-term investment horizon and be prepared for some ups and downs along the way.
Great advice. So while investing in future trends and technologies can be risky, it's also an exciting way to participate in the innovation that's shaping our world. Now let's move on to habit number 8, investing in rare and unique commodities. This one might seem a bit unusual, but billionaires have a unique perspective on tangible assets.
Absolutely. While most people think of commodities as things like oil, gold, and agricultural products, billionaires often look beyond these traditional investments to acquire rare and unique assets that have intrinsic value and provide a hedge against economic uncertainty.
Okay, I'm intrigued. What kind of rare and unique commodities are we talking about?
We're talking about things like rare earth metals, water rights, agricultural land, and even things like fine wine and art. These are all assets that are finite in supply and often appreciate in value during times of economic instability or inflation.
So it's about diversifying beyond traditional financial assets and investing in things that have tangible value and are essential to human life and well-being.
Precisely. And these investments often provide a hedge against inflation, which is a major concern for anyone looking to preserve and grow their wealth over the long term.
So how can someone who doesn't have a spare vineyard or a mine in their backyard start incorporating this strategy into their portfolio?
You can start by exploring commodity ETFs or specialized funds that focus on agriculture, rare metals, or other tangible assets. This allows you to gain exposure to these markets without needing to purchase a farm or a mine.
Great advice. It's about thinking outside the box and considering assets that have intrinsic value and are likely to hold up well during economic turbulence. Okay, on to habit number 9, focusing on cash flowing assets. This seems like common sense, but billionaires take it to another level.
It's about understanding that while value appreciation is important, having a consistent stream of income from your investments is crucial for both financial stability and continued growth.
It's like having a financial river flowing into your account, allowing you to reinvest and expand your wealth without needing to touch your principal investments.
Exactly. Billionaires love assets like dividend-paying stocks, rental properties, and certain types of bonds that generate regular cash flow. This provides them with a stable income stream that they can use to fuel further investments and expand their empires.
So it's not just about buying and holding, it's about building a portfolio that generates income, which can then be reinvested to create a powerful compounding effect.
Precisely. And this is a strategy that anyone can implement regardless of their net worth.
So how can our listeners start incorporating this into their own investment approach?
It's about allocating a portion of your portfolio to assets that generate regular cash flow. Dividend-paying stocks can provide quarterly or annual payments. Rental properties can generate monthly income, and certain bonds offer regular interest payments.
Great suggestions. And remember, the beauty of cash flow is that it allows you to reinvest those earnings, accelerating your wealth-building journey.
Exactly. It's a virtuous cycle that can lead to significant long-term growth.
All right, we're back for the final part of our billionaire investing habits deep dive.
Good.
We've covered so much ground already. I'm feeling like a financial ninja in training.
I know, right? It's been quite a journey. But we're not done yet. We have 2 more habits to unlock, and these are all about scaling your impact and aligning your investments with your purpose.
Okay, I'm ready for the grand finale. What's first on our list?
Let's talk about habit number 10, scaling up with high-growth partnerships. Billionaires understand that building wealth on a massive scale is rarely a solo mission.
Right. Even if you have all the money in the world, you can't do everything yourself.
Exactly. It's about leveraging the power of collaboration and recognizing that strategic partnerships can unlock exponential growth.
So they're not just lone wolves out there conquering the financial world. They're building alliances and working together.
Absolutely. They're masters of networking and forming strategic partnerships. They understand that by joining forces with other successful individuals and organizations, they can achieve far more than they could alone.
It's like that old saying, if you want to go fast, go alone. If you want to go far, go together.
Exactly. But it's not just about randomly connecting with people. Billionaires are incredibly strategic about their partnerships. They seek out individuals and organizations that bring complementary skills and resources to the table, creating a synergy that amplifies their impact.
So it's about finding the right partners, those who can fill the gaps in your own expertise and network to achieve something truly remarkable.
Precisely. Now, you might be thinking, well, how can I apply this if I'm not attending those exclusive billionaire gatherings?
Yeah, it's easy to feel like those kinds of connections are out of reach for most people.
But here's the beauty of this habit. You don't need to be a billionaire to think like one. It's about adopting a collaborative mindset and actively seeking out opportunities to partner with others who can add value to your endeavors.
So instead of trying to do everything ourselves, we should be looking for ways to collaborate with others who share our vision and have skills that complement our own.
Exactly. Think about it. Maybe it's a joint venture with a business that aligns with yours. Maybe it's co-investing in a promising project, or even just sharing your knowledge and skills with others in your field.
I love that. Even something as simple as sharing your expertise can be a form of partnership that creates a win-win situation for everyone involved.
Exactly. It's all about recognizing that in today's interconnected world, Collaboration is often the key to unlocking exponential growth and achieving those ambitious goals. And that aligns perfectly with the billionaire mindset of thinking big, being bold, and constantly seeking new ways to create lasting impact.
That's incredibly insightful. It's a reminder that we don't have to go it alone on this journey. Now let's talk about our final habit. This one seems to go beyond just financial success.
It does. This last habit is about aligning your investments with your values and purpose. It's about recognizing that we have a responsibility to use our wealth to make a positive impact on the world.
This is where we go beyond just maximizing returns and start thinking about the bigger picture, the impact our financial decisions have on the world around us.
Exactly. Billionaires are increasingly realizing that they have a unique opportunity to make a difference. They're not just seeking to grow their own wealth, they're also looking to create a legacy of positive change, whether it's through philanthropy or impact investing.
So they're using their financial power to support causes they believe in, to tackle social and environmental challenges that are close to their hearts. It's inspiring to see that level of commitment and awareness.
It really is. And it's not just limited to billionaires. More and more investors, regardless of their net worth, are realizing that they can align their investments with their values, ensuring that their money is supporting companies and organizations that are making a positive impact.
It's about putting your money where your heart is right, investing in companies that are committed to sustainability, social responsibility, or ethical business practices.
Exactly. It's about making conscious choices with your investments, knowing that your financial decisions can have a ripple effect, contributing to a better world for everyone.
But how can someone who's not managing a billion-dollar portfolio get started with this? It can feel overwhelming to even know where to begin.
It's actually easier than you might think. Start by defining your values. What causes or issues are most important to you? Then research companies and organizations that are actively addressing those issues. Look for investment opportunities that support their work.
So it's like doing due diligence, just like with any other investment, but with an added layer of values-based screening.
Precisely. And there are more resources than ever before to help investors align their portfolios with their values. There are ESG, environmental, social, and governance ratings that assess companies' performance on these factors. There are also impact investing funds that focus specifically on companies making a positive social or environmental impact.
It's great to see that this movement is gaining so much momentum. It's a reminder that we all have the power to make a difference with our investment choices.
We absolutely do. And remember, aligning your investments with your values doesn't have to mean sacrificing returns. Studies have shown that companies with strong ESG performance often outperform their peers over the long term.
So it's a win-win. You can invest in companies that are making a positive impact and potentially earn competitive returns at the same time.
Exactly. It's about recognizing that investing is more than just financial gain. It's an opportunity to make a difference and build a better future for ourselves and generations to come.
This has been an incredible deep dive into the minds of billionaire investors. We've learned so much about their strategies, their mindset, and their commitment to using wealth as a force for good.
It's been a privilege sharing these insights with you.
We hope you found this journey as eye-opening and inspiring as we have.
Yeah.
Remember, you don't need to be a billionaire to think like one. By incorporating these 10 habits into your own financial planning and decision-making, you can set yourself on a path toward achieving your dreams and making a positive impact on the world.
Keep learning, keep growing, and most importantly, keep investing in your future.
Thanks for joining us this sport.